The Bitcoin, it has become the digital currency of digital currencies. But its future may be in jeopardy. The world's biggest Bitcoin exchange changed its rule after Liberty Reserve, a cyber finance website, was accused of laundering $6 billion. Mt. Gox announced that anyone depositing the digital currency will actually need to verify their identity, ending one of Bitcoin's biggest selling points, anonymity. So is this the end of Bitcoin, or is it actually a step closer to making the currency more legit? We want to ask the panel. Bloomberg's Dom Chu, Jaron Lukasiewicz, founder of CoinSetter, a Bitcoin exchange, and also David McIlvaney, CEO of McIlvaney Financial. So good to have all you here. I'm going to start with you, Dom, on the story here. Tell us a little bit about what's behind this move.
Well, I mean, Trish, Bitcoin started off as a currency, if you will, that didn't really get a lot of respect, wasn't really well known, but all of a sudden, when it started to get more attention, you could start using it for more things, actually make transactions in this currency for goods and services. Yeah, it started to take on a life of its own. It started to trade freely. You could do it on all these exchanges. But as people start to get a little bit more, I guess, popularized in terms of the way that they view this currency and start to use it actually for transactions more, it is ultimately going to face more scrutiny from regulatory bodies, especially in an environment when you're talking about digital currencies that may or may not have a hand in money laundering, possible illicit activities. And that's the reason why it's important. As you take another step from being a so-called fad currency to one that may be more legit, you have to understand that if you want to sit at the big kids table, you got to be able to operate by big kid rules. And that's the reason why this is so important for Bitcoin and its users.
But, you know, Jaron, one of the things that has made Bitcoin so attractive to people is that it is anonymous. It's a little like cash. It's perhaps better than cash because you can go out there on the web and effectively purchase whatever you want anonymously. There's absolutely no record. So once Bitcoin loses that anonymity, that appeal, Jaron, is it still going to be as successful?
Yeah, definitely. You know, I think it's important to point out that Bitcoin actually isn't anonymous. It's pseudo-anonymous. So, you know, there are people kind of working towards both sides, trying to make it more and more anonymous. But, you know, in its current state, it's actually, you know, once you connect a name to a Bitcoin address, it's pretty easy to figure out where transactions have happened. I see this being great, both from a government perspective and a privacy perspective. And people are, depending on who you keep your Bitcoins with, you're going to be able to have really a selection and best of both worlds.
You know, Dom, one of the big concerns nowadays, of course, obviously terror financing and being able to connect the dots to the sources of the money. As I've looked at the Bitcoin story, I've been troubled by and assumed that it would become a much more heated problem with authorities because they're just not going to allow all this money to filter across borders without being able to track it in some way.
Well, I mean, it's the same thing as hauling around large duffel bags full of dollar bills, $100 bills, or liquid currencies that are bearer instruments, right? You take them. It doesn't matter who you are. You're not matched to it. If you have cash, you can buy something with it. With Bitcoins, it becomes a bit more of a gray area and a black area when it comes to its use in those gray and black markets. Whether or not there is a transaction being done, possibly, hypothetically, for drugs or for arms or some other, you know, bad thing, that's why it becomes an issue for a lot of regulators. That's why, as it becomes more prevalent for use, you might start to see a lot more scrutiny from these.
What I also wonder, though, as it becomes more legitimized, as it becomes less opaque, more transparent, maybe, David, people will start to look at this as just a good investment, right? Maybe they like the idea of having some asset that's not tied to whether or not QE is going to be successful or not. David?
Yeah, I think the two things that you're looking for in money is that they are a means of exchange, and that certainly qualifies. Bitcoin does qualify in that regard. The other issue with money is you have to have a store of value. Now, the volatility has been off the charts, and so looking at the charts, you know, from 20 to 260, back to 60, now at around $130 per Bitcoin, it has yet to prove itself as a store of value over the long term. But its utility is growing, and in terms of a supply and demand dynamic, Demand for it, I think, will continue to increase as people appreciate some of the internal workings of the currency itself. It has a scripting language which allows you to set preconditions for its spending. In other words, you can set up trust accounts. If I didn't want my kids to spend money until they're 25 or 30 years old, I can set money aside for them through Bitcoin, and it's not spendable until their birth date. You can do escrow accounts where you have multiple signers. There's utility that I don't think is appreciated quite yet, and as that utility is appreciated, the demand will continue to increase. And of course, you're dealing with a limited supply. 11 million units today, a maximum of 21 million units by the time you get to 2140. So you're dealing with very limited supply and increasing
really
demand.
Know that? I mean, this is a big question for me, and I'm going to ask Jaron this. How do we really know that someone can't hack into the entire system and create more Bitcoin, thereby reducing the value of what's currently out there?
Yeah, well, Bitcoin is basically created or founded upon the same kind of cryptography that things like bank security and pretty much all the security online is currently, being used with that. So, if Bitcoin is going to be hacked, the banks are in kind of the same situation.
That's an interesting analysis, an interesting comparison. Let me also ask you, Jaron, do you think that improved transparency, more legitimacy around Bitcoin is actually going to result in perhaps more liquidity because more people will trust it, and thus you'll see less volatility in terms of overall pricing? I
100% agree with that, and I think what the market's waiting for right now is platforms like ours that you can really build a trading business on top of. One of the problems that I constantly hear from traders right now is the fact that they can't build a business on top of Mt. Gox. And it's true, because when you don't know what your latency times are going to be, it's very hard to run a lot of, even basic trading strategies. So, as companies like ours and better exchanges, companies that are just like us who are trying to seek a regulatory path and really just trying to run our companies a better way, when those come online, we're really going to enable a lot of large amounts of money to flow into Bitcoin.
It's really fascinating, and we continue to watch this story with all its ebbs and turns. Thanks so much, the entire gang. Here's a cheat sheet for you on Bitcoin. You heard Dom say the more popular this currency becomes, the more regulatory scrutiny, of course, will follow. Jaron is saying that the future of Bitcoin has never looked brighter. David McElvany says Bitcoin holds the potential to be more than a currency. Okay, coming up.